What's up, YouTube? We're back here in Bali in the villa, and today we're going to talk about one of the first steps I took in order to prepare for the incoming recession and stagflation, possibly worse, which was to protect my capital. And the way I did that was to put a big chunk of it into gold. So today we're going to talk about four things around that. The first is a brief history of gold. The second is difference between paper and physical gold. And the third is the fundamentals around gold. And the fourth and final thing we'll talk about is how I actually did it. Like, how did I actually buy the gold and where am I keeping it? When we talk about gold, we have to talk a little bit about the history. And for those of you who know the history, just tag along because it's always good to go down memory lane. But at the end of it, and let's just get straight to it, the only reason why gold is considered money is because people believe that it is money. That's it. There's no secret behind the metal or anything around it. People like to talk about money being, hey, it has to be divisible, it has to be fungible, it has to be portable, it has to be all these characteristics, hold value and be scarce and so on and so forth. And I mean, all those things are true, but that's like a small footnote to the real reason why people think something is money. And that's because they just believe in it, right? And it could be anything. Look, if you go to prisons, they use cigarettes as money, right? That's their form of currency, like 2 cigarette sticks for, I'm not gonna say it, but XYZ. So it could be anything, right? And the cash, the pieces of paper in your wallet you call cash. I mean, there's this piece of paper, but you believe in it, right? Everybody else believes in it, and so that's why it's money. Same thing for gold, right? It's just a piece of metal that people believe is money. And there's a reason why they think gold is. I mean, there are a lot of other more rare and precious metals out there like rhodium, iridium, like platinum, so on, but those aren't like considered money, right? And the only reason is because, people just don't buy into the other things being money. And that's it. It's a psychological phenomenon that is aggregated at the society level, and that's what we consider to be money. Nothing more, nothing less. All the other stuff is just, you can get lost arguing and debating all that. It doesn't matter. Now, the one key differentiator with gold compared to everything else, and it's not even a close race, right, is that this has happened to gold for many thousands of years. Like, civilizations going back to the ancient Egyptian time considered, like the people there considered gold as money. And that went through the Roman times, and it goes on till today, where we still consider gold as money. And so it's the only thing that has lasted through civilizations, through wars, world wars, that continues to be thought by people as money. And that's basically it. There's nothing more to it. I don't really care about what the underlying thing is. I mean, it could be my sock or my dog's puke for that. If people believe in it for thousands of years, then bro, I'm gonna believe in it, because it's probably not just gonna vaporize overnight or in a year or a decade even, because it's been thousands of years. And there's nothing else in humanity that has kept that belief in money than gold. Nothing else. There's been many paper money currencies that have come and gone. Like in the States, people might not even realize that before the dollar, there was another paper money currency called the Continental, right? Most of you probably didn't even know that. So many, that have come and gone. But there's only one that has stuck. Could there be a new one? Sure. Like, people are saying Bitcoin is a new digital gold. Possibly. It fits all the check boxes of all the things that kind of matter, but not really. The more important thing is, do people believe in Bitcoin and money? There's a bunch of people that do. So that's why but does it have that history? And are you confident it's going to be there when we have like the worst case scenario? No, you need thousands of years, at least hundreds of years of existence to challenge or make a statement or a case that it could be considered something like money that gold has been over thousands of years. So that's basically the history of gold, and why I think it's, and not just me, most people around the world think it's a safe haven to put and divert and convert your capital or purchasing power into, so that it can hold the value and it won't be stripped away or taken away from you. The next thing we're going to talk about is, what is paper gold versus physical gold? And this one's a really simple one. Paper gold is basically representations of gold, or tokens of gold, or certificates of gold. You buy that, right? Rather than with the hope that the underlying gold is actually legit. and you buy and trade that. And that's what paper gold is. So you have ETFs or exchange traded funds in the stock markets where you can buy something like GLD, which is an ETF of gold. So like the ETF itself buys gold and then it sells shares of that same gold in the stock market, and you can buy and sell. And so there's stuff like that going on. Whereas physical gold is like literally the physical gold, right? Like you physically have the gold in your hand, like you touch it. And yeah, that's what physical gold is. And so it makes no sense to me to own paper gold. I mean, what's the point, right? Like the whole point of having gold is sense of security, right? So that it can't be taken away from you. And if you buy paper gold, that means you introduce something called counterparty risks, or somebody, an intermediator in between you and the gold that takes care of stuff. And if that intermediary in between you and the gold has an issue, blows up, or is not there for whatever reason, then you're toast. And so then that defeats the purpose of buying gold to a large extent. Now, some people would say it's easier. Yes, it is easier, but at the expense of security. And, you start getting into this comparison of like gold versus the stock market and the performance of gold. I mean, if you're doing that, you're missing the boat completely, 100% missing the whole point to begin with, because gold is not an investment, right? Gold's not an investment. Gold's a protector of your capital that you worked for and sweated a lot of sweat and worked for a long time to get to, right? If you want to save that, it's like the save button on your computer. You save it to gold, dude. It's not an investment. You're not getting into gold to make money, right? If you're getting into something, which is an investment, to generate returns, there's a lot better things than gold, right? Like I don't use gold as an investment. I have a lot more other instruments that I put my assets into to generate returns, and they have a commensurate risk profile with them, right? So makes no sense to buy paper gold. If you're going to buy gold, buy the physical gold, but and we'll talk this at the end, you have to know what you're doing, right? And there are some trade-offs on doing the physical gold thing. So now we'll talk about the third thing, which is, the fundamentals around gold. And I'll tell you right now, so I'm not a newbie to gold. I actually bought a bunch of gold back in the 07-08 recession when it dropped. And that actually was a way for me to actually make a lot, increase my net worth. When everybody was struggling, I was actually increasing my, I came out of that 07-08 recession or great financial crisis or great recession really well, right? I actually, I wouldn't say doubled, but almost doubled my net worth, right? And while a lot of people lost a bunch, and a big part of that was because I bought gold back then. So it's not something new, but I'll tell you today's fundamentals are even stronger than the fundamentals of gold back then. And I'll tell you why. Number one, today we have printed an insane amount of money that makes the printing that we did, basically printing money out of thin air, back in 07-08 to save the too big to fail banks. You can't, if you see a chart, you can't even see it, right? It's so small compared to what we did. And the reason we did what we did, and in a weird way, COVID, the biggest unintended consequence of COVID was this crazy money printing, because it totally spooked the Fed and Treasury of the United States to just print like mad and even stuff some of it directly into your back pockets with the stimmy checks, that we generated and printed so much money that of course you're going to have some kind of inflation, right? And inflation up to that point had been like non-existent. But because they did what they did, they hit the nuclear button on printing, and you have all of a sudden a ton more money chasing the same amount of goods and service. Of course prices are going to go up. And it did, right? And these guys, right? It's transitory inflation. Like, dude, just practice common sense, right? So suddenly we got the inflation genie unleashed. And now we have that problem, which they had to raise interest rates to tackle the inflation genie, and now they're thinking about lowering it, and so on and so forth. But the bottom line is they printed an insane amount of money, and that's going to just make gold be a safe haven as it continues to go up. The second reason why the fundamentals are stronger this time is now we've got this bifurcation and geopolitical situation where it's the US and its allies versus China and Russia and their allies, right, going at it, both in a geopolitical and also economic and global financial system, where we got the BRICS, and we've got basically the G7 and the way that the NATO people and countries are functioning, and they're competing with each other. And so that introduces a lot of pressure, right? And so then you just look at what the central banks are doing, particularly the central banks of Russia and China and Turkey. Really, Russia and China buying a lot of gold, right? And why are they doing that? I mean, it's clear they're doing that because they know that that's the one thing that will never fail. All right, so sorry, I had to pick up. By the way, look at all this food. I just picked up food delivery. All this food was less than $6, dude. There's 1, 2, 3, 4 orders of fried rice, barbecue chicken, grilled chicken, noodles. Dude, cost of living here, insanely cheap. And it's also really tasty. Back to what I was saying about the geopolitical and fundamental reasons of why gold is so attractive. If you look at the central banks of China and Russia, they're buying gold like crazy. And the reason they're buying it is because they know it's the one thing that will never fail, right? And if there's ever going to be a reset, or if there's ever going to be a war and they're going to have to challenge or usurp the existing regime, it's going to have gold as the bargaining tool, right? And so watch what the central banks are doing. They're buying gold. Central banks are the lender of last resort. When everything fails, they're there. They're like the final boss of a game, the central banks. And when the final boss of the game starts doing things in synchrony, you gotta watch what's going on, right? Because there's something going on there. And so what is all this translated to is the gold price appreciating, right? And it keeps on appreciating. And now it's always at new all-time highs every other day or week, in the last few months. It's just continuing to go up. And it's just representation of the fundamental reasons why it's continuing to go up. There's not going to be a better time to buy gold than I do think there's going to be a discount window, like when we have a liquidity crisis coming, I don't know, maybe between now and the end of the first half of next year. Everyone's going to have to sell whatever they have to meet the margin calls, and that includes gold. And so then the gold price will drop. And this happened in 07, 08. There was a big, a downturn of gold where it got kind of cheap for a little bit. And that's what I bought actually, after which it just continued to go up higher forever. And I think that's going to happen as well. So, there's a discount window that's coming that I'm closely waiting for to add more gold cheaply. And so the fundamental reasons have translated into price action. And, right now it's not so Bitcoin is it's trying to be money, but it's more actually a risk asset, right? So something that people think they're just going to make a lot of money by buying. The whole point is to make money. So a speculative risk asset is what you call that. And gold is not that right now, but it has been in the past. Actually, if you look back in the 70s leading up to 1980, the previous peak when it was at $900, just a shy under $1,000, it actually had a speculative risk asset profile, and people were just buying gold just to make money, right? To get rich quick and get rich quick schemes. That creates what we call bubbles. And gold was in one, right? It went up 900% in 4 years. I mean, that's Bitcoin level bubbly. People forget about that, but it happened. It's happened many times. Again, over thousands of years, right? Not just hundreds of years. And it's always there. And so that popped in 1980, and then look at where we are now, over 2,500, right? And so the reason I mentioned that is it is possible for gold to then convert or transform into a speculative risk asset where people start buying it just for the sake of making money. And that's when you'll see price appreciation just skyrocket, much, much higher. But the bottom line is this: whether or not that happens, it doesn't matter. Gold is a protection, right? A way to preserve your capital. And it's going to go up in the long run. And long run, I'm saying 3 to 5 years. It's a pretty safe bet, right? That it can store the value. And that's why people are continuing to purchase it along with central banks. And so if you look at a technical analysis of the gold price chart, any technician in investing charting will tell you it's a very strong bullish chart. And I agree. And that's why I bought years ago, and I'm looking to buy some when the discount window happens again. Now, finally, I'm going to talk about how I actually, bought the gold. Now, I told you back in 07, 08, I did buy gold, and that's how I actually increased my net worth during that whole fiasco. And the way I bought it back then, so U.S. is kind of, I was living in the U.S. back then, so it really depends on where you're domiciled, right? So I was domiciled in the U.S. back then, I was living there, and the thing here is, the U.S., Uncle Sam likes to tax you. They tax you. It's over 20% tax if you own gold, right? Gold coins, gold bullion, because it's part of this collectible clause in the tax system. And so that's a bummer, right? Like that's like over a fifth of it just gone to Uncle Sam. The other thing is I didn't like and didn't feel safe about was that at any moment in time the U.S. can make gold illegal to hold again, and it was illegal from like 1933 to the late 70s. Actually 1974, when I was born, it was 1933 to 1974, it was illegal to actually own gold. You'd go to jail for 10 years, then you'd have to pay twice the amount of what the gold was worth in terms of paper money. What? So, and they did that because guess what? There was the Great Depression in the late 20s that caused the banks to collapse, and then, they had to step in and make it illegal to control the panic selling. Now, we're not the same setup as we were back then. We don't have, like now it's complete fiat money, right? There's no gold standard to back the printed money. So we don't have that. But the whole point here is, look, you don't know what the government's capable of doing, right, and willing to do when they get into a crisis mode. And who's to say they won't make it illegal again for maybe a slightly different reason or a completely different reason? Who knows? But the U.S. has been able to do that in the past, and I just didn't feel comfortable that they maybe would or wouldn't do it again in the future. So what I did back then was I bought gold on an online marketplace exchange and had the gold stored in a vault out in Switzerland. And it was not the best way, but it was, I guess, the best way given the options that I could come up with. And I had to do a lot of research to really verify like the marketplace. And it did introduce some counterparty risk, although, you did own the certificate directly of ownership in the vault at Switzerland. But there were a couple of things I didn't like. I couldn't actually physically see the gold. And I had to rely, even though I did a lot of research and confirmed that third-party auditors legitimized this marketplace and the gold that I bought, it still kind of was this relying on other people thing that I had to deal with just in order to circumvent some of the drawbacks of being domiciled in the U.S. at that time. But today, I'm now domiciled in Singapore, and Singapore is a very gold-friendly country. They just recently updated legislation to basically just eliminate any kind of tax whatsoever with buying and selling gold, period. Like there's zero. You can do whatever you want with buying and selling gold, and it's nothing. Like there's no tax. The other thing they did was there's also no import-export fee. So you could literally like come into Changi Airport with gold or leave Singapore with the gold and go wherever, and that's it. There's no payment or fee you have to pay. You just got to declare if it's over 10,000 because that's something they do for anything. But there's no like tax or like fee you have to pay when you're taking in and out of the country. So Singapore itself also is one of the largest gold buyers. Its central bank, or it's the MAS, has been buying a lot of gold as well because Singapore is smart. It knows, like Singapore is a good like neutral zone like Switzerland, so it knows that in order to play that role, it needs to have that type of an asset that's not going to go away, that everybody believes is there. Like there's no convincing that needs to be done. Like, oh, it's not the future. No, it's just is, right? And so that's why they've increased their gold holdings as well. And so what I did was, because of this, I just decided to buy physical gold, so I found the best dealer. I made sure I was able to go to the shop, like the physical storefront, and I went there and I asked them to present the bars of gold, which they did. I had to call up ahead of time. And they did, and they let me inspect every single bar, with my instrumentation, just ensure that it's actually, I saw all the serial bars, confirmed that they're all legit. Everything was signed with the serial numbers of the bars before they took it to the vault. And the vault is actually in Singapore, so it's not at home. So I have nothing valuable at home. Don't come at me at home. But the vault is actually an interesting one. It's located on a parcel of land that has no sovereignty, meaning like there's no country, there's no national country or international country laws that govern that piece of land on top of is this vault. And so it's very neutral in that sense. And that vault actually stores like very rare and valuable paintings and other types of art, or anything of high value is a maximum security vault, including some gold bars, of which mine is in there. I pay a fee that's not too much every year considering the amount that it's protecting. And I just have it there. It's like a 5-10 minute drive away if I need to go pull it out for whatever reason. and I don't have to deal with theft or fires at my place where I live. And so that's what I did this time around, and I plan to add more to it when the discount window opens up. Now, if there is a situation, it gets really bad, well, yeah, I'm just going to drive there and physically confirm who I am through the physical and biometric security process and get my gold out. And that proximity and that close distance, while at the same time not being governed by any sovereign entity, it was a great setup for me. And so that's what I did. And that's what I think you should do too. Broadly speaking, parks, now I'm about 35-ish% of my net worth is in those gold bars. And I think you should consider putting some percent of your net worth in gold as well. Perhaps not as high as me, but to some degree, maybe 10, 15%, just as security, right? Just in case, the just in case thing. It'll also help protect against inflation or even deflation. And if we do get, in fact, some financial crisis and there is a margin call liquidity event, there's a chance to add more to it, like I said earlier. And that's what I plan to do as well. So those are basically the reasons why I got into gold and how it facilitates that first step, which is to preserve and protect your capital. That I would recommend everybody take a hard look at. You look at your assets. If any of your assets are in like bubble territory, whether it be real estate, which is definitely in a bubble, or equities or anything like that, consider like liquidating some of it and converting it into into something like gold that basically protects it. So having said that, I hope you think through your setup, because what's coming is coming soon. And if you like this content and this content like helps you, do hit the like and subscribe button so the algorithm can share this with other people that we're trying to reach out and help. I have nothing to do with any gold services or businesses. I mean, I don't sell gold. I don't work with any gold dealers. I make zero out of it. I'm only doing this just because I did it before and it really helped me increase my net worth after the 07-08 recession. And I just want to share like what I did and what I'm doing right now. Again, this window of opportunity comes every like decade or so, or 2 decades, to really make a life-changing strategic move in your portfolio. So peace out. See you in the next episode.